France 24 business editor Brian Quinn joins me in the studio for a closer look at that huge rout on Asian stock markets as the fallout from this continues to reverberate around the world. Brian.
Karis, as you were just saying, major indexes in Asia taking a massive beating on Monday. Donald Trump's latest round of tariffs will bring U.S. import duties on Chinese goods to 54%. Chinese stock exchanges were actually closed on Friday when Beijing announced that it would be retaliating with its own 34% tariffs on U.S. goods. As trading reopened Monday, it was indeed a bloodbath. Hong Kong's Hang Seng index down more than 10.5%. It's its worst day since the 2008 global financial crisis. Tech sector, banking, retail, all sharply down. HSBC shares are off by some 14% there. The Shanghai Composite, meanwhile, down more than 6%. The Nikkei in Tokyo falling also more than 6% to an 18-month low. Japan's banking index is down 17%. Now, those losses come on the heels of sharp drops on U.S. markets. Friday, as Karis was just saying, some $5.4 trillion in market value wiped off Wall Street's benchmark S&P 500 index alone. Trump is taking serious heat from the country's investor class, with even allies like Bill Ackman of Pershing Square Capital Management saying the U.S. is headed for an economic nuclear winter over the tariffs. And J.P. Morgan's chief economist putting the risk of a global recession in 2025 at 60% now. Analysts say both the U.S. and China will be hard hit by the trade war, but that it could actually be worse for America.
The impact on from the retaliatory tariffs will probably be felt more in the U.S. than in China. We could see a recession happen very quickly in the U.S. and it could last through the year or so. It could be rather lengthy. And if there's a recession in the U.S., of course, China will feel it as well, because demand for its goods will be hit even harder than they would have been hit just because of the tariffs.
Meanwhile, Europe is preparing its own response to Trump's latest tariffs.
So as we recall, Karis, the European Union was number 2 on Trump's list of worst offenders as he unveiled his global reciprocal tariffs last week. The bloc had already been facing 25% tariffs on steel, aluminum, and automobiles, all of which are crucial export sectors. Trump adding 20% duties on nearly all other European goods as he unveiled his Liberation Day tariffs April 2nd. Trade ministers from across the EU will be meeting in Luxembourg this morning to discuss the impact of those tariffs and how to respond. And diplomats have said the main goal there will be to express a desire to negotiate with Washington to remove the tariffs. Europe, though, is preparing a set of targeted countermeasures on some $28 billion worth of U.S. goods. There is plenty of disagreement within the bloc, though, with France and Italy in particular worried that retaliation could lead to escalation. Those two countries are worried, especially for their crucial wine and spirits industries, as Trump has threatened a 200% tariff on European alcohol if Brussels retaliates. Meanwhile, top Trump advisor Elon Musk said over the weekend that he would like to see a zero tariff free trade zone between the EU and the U.S. Trump trade advisor Peter Navarro saying Musk was likely just trying to protect his Tesla business. Here's Musk.
I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America.
And we will have the European markets opening in just under an hour's time. Karis expecting some pretty significant losses there, too. We'll be keeping an eye on it.
All right. Thank you very much, Brian.